Hey everybody, JC Peretz here, founder of allstarcharts.com, and I am joined, as always, by my main man, Mr. Sean McLaughlin. What's up, Shawnee? Are you here? Oh, I lost Sean's audio. Can you, Sean, you're muted.
Oh man,
Dude,
what a rookie move. Sorry,
amateur
guys.
hour over here. Like the first timer?
What a rookie, man.
Oh, God. Killed the open. No.
I was on mute because right before we went live, I was pounding a grilled cheese sandwich and I didn't want you to listen to me chewing. I was being respectful.
Oh, I bet you were. I bet you were. Listen, so Wednesdays we have our team meetings, all the analysts get together, start sharing ideas, start throwing some scenarios around. You know, why are low volatility stocks keep continuing to underperform? Why do interest rates keep creeping up? What does that mean for the overall market? We don't know what it means. We're trying to figure it out, but we can come up with different trades and different opportunities out there to take advantage of the circumstances that we think might be, while at the same time minimizing our risk as best we can. And there are different ways to do that in different market environments. So we're in an environment where over the last year, the S&P 500 has just been in a sideways mess. There have been winners along the way. There have been losers along the way. More and more winners from what I can tell. So what does that mean for what's happening next? I think we're going to continue to see more and more winners. And one common theme that Sean, I mean, you know, you keep hearing us say the same thing. These bases that have developed since the first half of 2022 continue to resolve to the upside. We keep seeing them. DraftKings, right? And today, look at IONQ as well. Palantir, another one. IONQ. These technology growth stocks keep popping up, huh?
Yeah, this one in particular had a really nice pop following earnings last week, and this was a name that we had our eye on, but we didn't want to chase it, and we were kind of waiting for a pullback, and I think we're getting it right now. This is the pullback we were waiting for, and if we still like this stock, this is the time to get in, and that's why we're pulling the trigger today on an otherwise down day. But I feel like that move that happened last week in IONQ, that was the stock is kind of declaring its intention that we are moving higher. It's coming out of this base. That was a very loud and clear signal that it's time to go. And of course, we could be wrong, JC. We've been wrong before. We'll be wrong again. But to me, that chart looks like it's shouting to us, saying it's time to go. Let's get in.
Yeah, so a couple of things that I want to talk to you about. So first of all, we have a very volatile move swinging in both directions today. So kind of taking advantage of this pullback in the stock to accumulate, right? And this way through the trade that we're putting on, which is the bull call spread, right? Which we'll get to in a second. But this doesn't like strike me as the type of stock that you would want to put a position on, even a bull call spread in the way that we put that through. What drew you to this one?
Well, what drew it to me is that this is a stock that I feel like if it can get going, it could really move. This thing could double in no time.
Yeah,
I would not be surprised to
it
see this
just did,
stock.
by the way.
Yeah, it just did, but it's got a long way to go. I would not be surprised to see this thing make a run back at its all-time highs from last year. And by the way, when I say all-time highs, the stock hasn't traded for that long. It became public late 2021.
SPAC, right? SPAC.
It was a SPAC, yes, I believe so. And it peaked out around 35 and change. I feel like we can get back there. I mean, look, you and I aren't fundamental guys. We don't really care so much, but you know, they signed a big deal with Amazon. That's kind of what's got people excited. The last two earnings reports have been well received. I feel like that base that we're looking at there, that big old base that lasted for a better part of a year, that was just a lot of the hot money crowd who got in on the IPO, taking profits, moving on. And now that we got those weak hands out, the base is going to kind of lend us support for possible move back to highs.
And we keep seeing this again and again and again on a lot of these beat up growth stocks. And of course, the SPACs are, you know, front and center in this type of security, this type of scenario, high growth sort of liquidity event in 2021, you know, early 2022, whatever the case may be. And a lot of these things got absolutely slaughtered since that, but they've been in the process of undergoing accumulation from what I can tell, which is what these big bases in the old days, they used to call them saucer bottoms, like Edwards and McGee used to call them that, because that's what accumulation looks like over time. And then when you look at other areas that appear to be trading the exact same way, what are they doing? They're resolving higher too. We mentioned Palantir looks very, very similar. So this, what did we say? We said eight as the level where all bets are off. Below that, we're quite a bit away from there.
Yeah, $8 a share is where I'll be convinced that I'm either early or wrong. Either way, I want to be out. I want to, salvage whatever I can from the spread. I don't want
Let's talk about it.
What's that?
Let's talk about the trade.
Okay, so we bought the January bull call spread. We bought the 10 calls and we shorted the 20 calls against it. Now, the reason why I did the bull call spread versus just buying the calls, which by the way, I don't hate just buying the call side, just buying those January 10 calls. I just felt like the 20 calls in January were offering what felt like free money to me. You could still sell them for about 80 cents. And I don't know, it just felt like it improved my odds of success in case this thing doesn't get going. And we talked during our analyst meeting this morning that part of the reason I liked this trade is that there's a great reward to the risk we're taking. We're only taking $1.85 a risk. We could potentially make as much as $8 on the spread. But more to the point, we've got a lot of headline risk out there right now with all the nonsense going on in Washington. I don't even know what they're arguing about, JC, but everyone seems to be paying attention to it, and everyone seems to think that the market's going to have a big move one way or the other. And so in that kind of environment, I want to have defined risk trades where my upside can be dramatically higher than my downside, but at least my downside is defined and it's small and I could manage it.
But also because of the elevated stress levels of the world in this particular environment, I came into our meeting saying, what are we selling? We got to collect something, right? Everyone's, VIX is slightly elevated, for the first time, like all year, or second time all year, I should say. Can we sell into this? How do we sell into this? And you were like, oh, I don't know if I want to be selling premium in this environment. And then, you kind of came around to this particular trade, right?
Yeah, that was exactly how I said it, JC. I said,
oh, I don't want to do it. Oh, it's too scary out there, JC. That was how it was.
Look, I didn't say it was scary, but I didn't think the rewards justified the risk to be selling some delta.
I came in there guns blazing, sell the premium. They're paying so much for the premium. Give it the people what they want, Sean. Give them what they want.
Right.
Okay, so we ended up doing that. We did sell right out of the money calls, which caps the upside, but there's still more than enough upside, right? So how I look at it, so it's worth it.
Right. So as you can see on this graph here, we can make as much as 815 on the spread. Now, I won't be around long enough to collect 815 in this trade. That to earn that 815, not only would IONQ have to be above $20, but I'd have to hold it all the way into January. And if I'm sitting on a spread that's way in the money, let's say it's the stock's trading at $25, and I'm trying to eke out that last 50 cents of value in that spread. I'm basically risking $9.50 to make the extra 50 cents. I don't like that math. Sure, it could work. It's a high probability that it can work, but I'd rather just take the quick gains, move on to the next trade. And so when I could sell that spread for about $6, I'm going to do that. Selling at $6 would not only mean that I've captured more than half of the maximum gain I can actually earn in the trade, but I've also tripled my money in that case. So I feel like that's a good trade to get out there.
All right, so this is IONQ. It's a $2 billion computer hardware stock. We're long the 10 calls and short an equal amount of the 20 calls. So this is a January 10-20 bull call spread, IONQ. I like the base in this environment. I like, collecting something to help pay for whatever it is that we're doing. Sell into it, right? Come on, Sean, give the people what they want, man.
Give the people what they want.
All right, I'm JC Peretz. This is your boy, Sean McLaughlin. Follow Sean at Options Sean and follow me at All Star Charts. And I'll see you next week.
Take care, everybody.
Adios.